tryna take it down, placeful. You just scoring mines, press the bar.
All right, ladies and gentlemen, I got your watch list coming into January 7th, 2019, and our work is cut out for the beginning of the year. I want to talk about this play, $50 into 500. It is a current debit spread that we have on, and why I want to talk about it is because it's going to lead to other potential plays that we have to look at today, or better yet, plays that we are going to be able to play tomorrow. But again, how these are setting up, either it's one company, Amazon, that's the play we did. There's also going to be Facebook, and overall, we need to talk about basically what happened in the market today. There wasn't too much, but more or less what this is looking like, how it's setting up for this move. Because remember, this was the first official day back into 2020. So this is the first official week. We're waiting for some important stuff. There's still that important Iranian stuff lingering still in the background. You're seeing how the market's reacting. I think we're at a very interesting spot. Very interesting. So we'll go over that. We'll go over the plays we made today. We made some pickups to the long-term portfolio, and that is pretty much it. And again, those plays we're looking for tomorrow, and that's it. So let's get into it. But before we do that, you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free. Come source that information. Just be positive and respectful. The only fee to be there. But also on this video, do not forget the most important thing you need to do. Post your watch list below. Let us know what you're looking at. You got any plays, anything you've already made. This is where you want to post those plays. Post that below. Source that information. Let us know if you agree, disagree with anything, what you're looking at for tomorrow, and hopefully, again, we see you on the live stream. So now let's get into it. I have the keys for tomorrow, but before I even discuss that, as far as what we see right here, right now, the SPY opened up red. We had this gap down from, remember, and we even closed down red on Friday. That was after the whole Iranian thing, and then now we opened down red, and we went right back up. This is one of those typical buy the dip moments that we've been seeing that in a few ways and shapes, but it's ending up, it just looks a little bit different depending on the size of the drop. Now, that is factoring in what's going on with the Fed, but also now, too, as the days go on, this is what's going to make the Iran situation, we really haven't heard of much retaliation or anything. So this is what I even said on the watch list yesterday. I said, pay attention to how we melt up. I am still expecting this melt up just because that's historically kind of what we see at the beginning of the months. There isn't usually until earnings start to hit. There's not going to be any real reason, or until earnings wrap up, that you're going to see the markets kind of come down. But again, you never know. This could be one of those things, the Iran situation. So it's still holding up, but I'm still expecting a small melt up. And now this is what I have this in the keys, and this is one of the main things. You could kind of see it here. Now the market's hitting the highs, and you see this like gap up, bigger candles up and down. But then when it starts kind of bouncing in a really close range up to the top, but still kind of looking volatile, it's kind of looking like this, but towards the top end. That's when you start to see how global turmoil looks. And let me give you really what I'm trying to show you guys and compare it towards is 2014. Dang, I got to go back on the 10-year, man. We are aging in dog years. All my old traders out there, you know what it's like. You know what I'm saying. So this is what I kind of want to show you guys. End of like 2014, 2015. But this was a situation where the global, you could see there was definitely global turmoil, and kind of how it looked. It kind of looks a lot like what happened this year, but this is 2014. This was the first oil crisis. There was problems with Russia, but you kind of see when you start, like you gap up, you get that melt up, you're kind of at the top, but then it starts to like hang out and go up and down, but then like drop and then come back up and stay in a range. And it kind of does this. This is what global turmoil kind of gets reflected like in the markets, where it'll stay up high towards a range, but it will be very volatile up and down. So that will be good for trading. Interesting for the long-term portfolios, but if you're not down with the ups and downs, it gets very confusing. But that is pretty much what I'm looking for, and that's why comparing it to where we're at now, this is what I want to see, is how do we move up, how do we melt up at these moments, because essentially, if we start to come down, but then it starts gapping up, or it kind of just stays elevated but volatile, bigger candles up here, that's going to let us know that the Iran stuff is having some more weighting. But if we start to see it melt up, that's going to be another story. So now let's get into the keys. That's probably one of the main things I want to talk about here is we're kind of setting up for a gap up. And again, a gap up will make it easier. I kind of want the gap up because it'll be easier for us to spot in terms of what's going on. But if it does gap up, and again, when there is negativity and then the negativity gets brushed off, that does add fuel to the flame. So I'm watching out for that. But if we do get a gap up and it starts to break out to a higher range, that'll confirm that the Iran stuff isn't as serious, but that stuff is still at play. all of those tensions are still big issues here, right now to this day, and it could even be a good opportunity to even play it. That's again, remember, it's better to be late than wrong. Iran happened. You could have made money the first day it happened, but now 2 days later, the market, some stuff and assets have changed. The market, since nothing bad happened today, some of the risk kind of dies down a little. You could get the same exact play now for even cheaper, believe it or not. So those are going to be some plays I'm going to be keeping my eyes out for coming into tomorrow and even the rest of the week. So watch all for that. That's the main thing we're going to be looking out for. Otherwise, there is some China stuff, but beyond that, everything's kind of just coming in the beginning of the year, setting up, and the next headline you're going to start getting will be earnings out of most of these companies. So watch out for that. And then even today and in general, some big names are already rotating. So if we do start to go up, and that's the thing, once our direction is more solid and we know that we're going to be in this global political either funk volatility, or that we're actually going to kind of break out and get that melt up towards kind of the end of the month. And I'm thinking melt up towards the end of the month. Then I think then I could justify some more volatility. So if that's going to happen, I'm saying watch out for some of the names that are already breaking out and rotating. And that's kind of now even what we're seeing with like Amazon and Facebook. That's the play I'm going to talk about. But these big names are already rotating. And what I'm going to be looking for is either getting time now on the laggers, because once the big names start rotating and then everything goes up, those laggers are going to start catching up. Starbucks, Walmart, even McDonald's, we even saw them move today. And then play the breakouts that are already in motion. Think how we did the AMDs last week. So we might pretty much see that play out. So there's that. And then as far as even the long terms, buy in different time frames. We were slow to put the money in. You're depositing every month. Even when you want to buy it, that's what I did today. I wanted to get 2 Spotify shares. I only bought 1. And that's one of the plays I made today. And then I also bought 1 share of Disney, but I was going to buy a lot more, but I said I'd wait. I'll wait to see on the Spotify. And then again, I still want the Snapchat. We're still waiting on that as well. So there's those plays, but actually, let us get into the plays. Those were the only plays we made. As far as trades I made today, I didn't make any option trades, just stuff in the long-term portfolio. That thing was working out great today. We still saw some gains across the board, but now there was plays that I wanted to get. I was even thinking of playing the breakout on it, but they are also related to the plays we have. So now let's start. These are the 2 plays I think this week are going to be a great opportunity again, and how they break out and move from here, depending on how this sets up. This is what makes it difficult, because they're either going to have a breakout week this week, or they're going to set up for a breakout some point in the month. Again, they are already setting this up, especially with earnings around the corner. But Facebook and then Amazon. So the first play was Amazon, and I'm going to show you guys on the option chain which one I like. But if you remember, we got this play last week. Again, it was playing. Amazon was a lagger. Now they're catching up. We bought this for $55, so it's a 1990 call, sell to 2000. So there's a $1,000 max gain, and we paid $50. So $50 in, $1,000 max. So pretty much my next week, we need them to go to 1990, about $90 from where they're at now. But that'll be even the week before earnings. So this one's pretty good. And why I like this now, because the other play I'm looking to set up is another credit spread. And these are the ones I want to keep on watch for tomorrow. That could potentially be good. So now this one covers till next week. That's why I'm considering one for this week to play the short term if I could get one at a good price. And there's a few that I spotted. And the whole idea too is if I'm playing the shorter term and I'm pretty much expecting it to get above this 1900 and really start to break out. So again, it's kind of one of their key levels again, and they've broken up before there. Anytime they did break above it, the first time I remember they skyrocketed up to 2000. Then after that, they went up 40 or $60. Anytime they've gone above 1900, it's had a big move. Remember, Warren Buffett's in at, I think, 1920 or 1820 or something like that. So that's good, but we don't know if it'll last or not. So again, I want to have that one holding into the earnings. I think that one's great. But now, and again, too, take a look at the SPY. SPY's hitting all-time highs and past where it was in December. That's not the case for Amazon. So Amazon's lower than where it was. So again, if everything was to catch up with the SPY, the earnings for some of these tech companies, that could be very good. But I like this. I'm thinking there could be a good play on the weekly to try to get closer to the money to get in that $40, $50 range if it pops, and then hold the weekly. So I want to play one on Amazon. I'm going to play one on Facebook, but you guys are going to see I have a weekly on Facebook as far as my debit spread is concerned. So I want to get a next week for Facebook, this week for Amazon. And again, you could just get more time on both of them, or you could even try to push these to the wall and wait till these get cheap. But the ones I was looking for start at $19.50, and what I was looking for is to do the same play where we could get $500 or even $1,000 of max gain. That's the special thing about our spread. It's so far out and we got it so early. We were able to get $1,000 max gain for $50. But the next play I was looking at here, it's right here. It would pretty much be the 1955 sell the 1960. This was $50 to make 500, or I had the original 1950s. If you could try to go $5 or $10 apart and try to keep it under 50, but these spreads changed. Earlier today, these were a lot cheaper, but anything 1950 or below, and I think the max, I don't think they could get to 1970 by this week. If they do, that'd be crazy, but then again, that's where my other contract would profit, so I'm going to try to get anything between 1950 and 1970. I think that's like the top end, even 1950, for them to move $50 after even moving $27 today, that'd be pretty big. But again, how we've seen some stocks like AMD move, especially right now, even getting ready for some of their earnings, that who knows. But that's the first play I like, and then the next one I like is going to be on Facebook. But now again, this time I want this week, or I want next week, excuse me, because I already have this week. So remember, I got these last week. I was like, oh, I wish I got more time, but we bought them for $28. They're now worth $61, and you can see it's a 215, 217. So pretty much we're hanging out right there. This was actually after hours. When I was getting ready for this video, this was already in the money because it was up 10 more cents. So essentially, we already have the at the monies for this week. Remember, this is in $2.50 increments. Facebook's a little bit more difficult with that on the weeklies. So as far as getting the weeklies, I'm only going to hold that. That one's $30 to make 250. But I was thinking I could sell out of those, and then pretty much I could roll into these, buy the 222s to sell the 227s, 500 max reward, or I could even sell the 225s and then buy the 227s even for another $20 to $250 and just get time. I like Facebook in general. I do think this is a good play. I want to hold this for a little bit, but if this one goes in the money or we're able to get most of that max gain coming into tomorrow, I have to see how high it goes. I would probably cut profits on that pretty much early, or again, too, I'm going to find one of these. I would cut that one out and then find a January 17th to roll over. But I like Facebook a lot. Again, even with the Amazon, I think both of them have room to run up if the market climate is there. And that's what we talked about, because if anything happens with Iran, the overall broader market, anything like that, they're probably going to get dumped on. Or it's just going to slow down the pace. And that's why I said you could even look to the ones towards next week. But those are the two plays. I think those are going to go crazy. Again, I like the whole $50 to $500 or $50 to $1,000 play on Amazon. But again, the key is going to be how much you spend on it. But if Amazon goes crazy, I think it was like 2 or 3 weeks ago when I had that move, that was very, very profitable on the weekly. So Amazon's been moving in some bigger increments. We'll see after that last down day, or even tomorrow, if tomorrow starts off slow, the option chain could start lagging on that. So there's that. And then Facebook too. Facebook, again, as a final note, it's moved up already kind of so slow. This has been a big day to it, and again, when they have big days, those contracts could run real quick. So again, I like both of them. I'm going to keep my eyes on those. Those are the main plays. As far as everything else now, there's a few other companies I'd want to watch it. One is Roku. They had a very big day, and again, watch the rotation, but even more, Shopify is another one of these stocks. This is what I'm saying when I said other companies have already rotated, and they're kind of getting into that formation where they're really profiting off of this move, regardless of Iran or anything. And if the melt up is going to continue, there's some companies getting a head start. There's going to be some companies moving with the market, and then there's going to be laggers. But Shopify, they're kind of getting that head start. If they break above here, you guys saw Shopify go crazy. It's going to be expensive to play, but at the same time, the key with Shopify, if you don't want to do debit spreads, one thing. Remember, we hit that Shopify debit spread. That paid out very, very nice. It pretty much allows us to get close to the money for cheap. That's the advantage of the debit spread. But if you do go really, really far and get one of these cheap ones with time, we've seen what some of those contracts could do. So I am going to be looking out for some of these tomorrow. I really want to get a Shopify. Again, we have to see what the market is throwing at us in the climate, and I want to take advantage of stuff. These are hot right now, so if there is even a down day, take advantage of the down days. That's what we did even last 2 weeks with Amazon and Facebook. So watch out for them. Then watch Spotify. Again, they're leading. I got them today because they're now at their IPO price. They're doing good. Their earnings is right around the corner, so I think they're going to set up, but breaking out to one of these highs. Again, they have a very, very short history. They're back at the IPO price, and now they're getting towards a higher price they haven't been. I think they could start going a little crazy. So I added one share today. I want to get another one. Remember, we bought those other shares at like 107, so we're still holding that. But Spot could even be good to flip on the contracts. Then Disney, they're a lagger. I got their shares, but they've been a lagger. I grabbed one extra share of them today, but I still like them because, again, SPY's hitting all-time highs. They're going to be one, or if the SPY does start to melt up and hit even more highs, they're lagging. We might start to see them turn around. So I like Disney a lot. I'm going to be looking for a play. And then Booking, they dropped. So you can see kind of stuff giving up more than others. But somebody brought up a Iron Condor. It's like within like $10 or $15 on the upside and 20 or 30 on the high side with like a $50 collateral. I might be inclined to look at these. I want to see what the options and the stock does tomorrow, but that one is what I'm going to keep in mind for a premium sell. Then watch Tesla. I can't believe it's at 450. It's crazy. There's 475, 500 contracts going for so much. This could be a good put play, but be careful on the timing. So maybe that, or even a butterfly play, lower odds, but who knows what could happen, but cheaper cost basis. So I'm going to be watching them. I'm going to be watching AMD. I still want that 50 contract. It's at the same price we sold it at, so I'm watching all those and even all the other chip makers. Then Snap, they were closing red today. Then they closed up. I was surprised. They didn't sell out when it rotated down. They're kind of holding up. You don't ever see Snapchat really hold too steady unless it's like kind of at a low. It holds the downside steady, but it's never really held the upsides pretty steady. So it kind of has my attention here. I guess it did do that towards the beginning of 2019 after, but you saw what it's pretty much done from there. So that's a good sign valuation wise, or I guess how the market's valuing it. But again, you could see the 16, 17 level, pretty crucial point for them. So we'll see what happens after that. But I still like them. I might want, depending on how things are tomorrow, I might have to get those shares tomorrow. Then Netflix. This one's going to be expensive, but they moved up a lot. I was really, really surprised. Again, that was a big candle. Again, for all the tech even coming in earnings, and that's something I would say now. It now might be the time to even set up for earnings, depending on how we see tech move in some of these laggers. Because as I'm saying, look at the 100-day, look at the 1 year. All of these companies are down. They all have caught up with the SPY at one point. So this is something you guys will definitely remind me about this tomorrow if you guys want me to elaborate. But you'll take a look. Here's the SPY, Netflix. No matter what each company has done, they've pretty much balanced and met up with each other as of late. They've kind of detached from each other. One of them is going to meet with the other one. So it's either coming this earnings, that's going to be their opportunity to go up, or the market's going to come down. So that's why I think coming towards earnings in January, it's going to get exciting. But watch Netflix anyways. Then NOC. Again, this is what I was saying, where some of these bigger name defense stocks, even after the Iran move, all that stuff's still in play. They've already dropped. You could still get a play, and now you could play them with the IV dropping, but the same exact logic is still in play as what's going on and what they, why they moved 4 or 5% the first time. So watch them. Intel as well with the chip makers. They were just at 60, and then they kind of came down, but I like them. And then finally, here's just all the dividend stocks that are coming into ex-dividend, and I want to just watch these in general. I like Abivi. That's one of my new favorite ones. Remember, we picked up a couple $100 of shares the other day. Altria, their dividend payouts coming, but I like the fact that they're already even kind of basing and holding a level. That's saying something about Altria itself. Then you got AT&T, their ex-dividends right around the corner. They're still holding up pretty good, so that's going to be interesting with their ex-dividend. They usually sell off big, so we'll see, but they're kind of holding up. And then Walgreens has earnings in a few days. They're actually doing quite good. And then Qualcomm, I forgot what it was. There's something with Qualcomm, but when they start, they're making a interesting move after holding this level. I think I forgot. Damn it, I had something for you, but something will remind me, or somebody will remind me. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure we catch you on the watch list. Oh, no. Make sure we catch you on the stream tomorrow morning. You better be there. You better post your watch list. You better be in the game. Polish that armor, baby. Get that helmet on. Don't get distracted. All it takes is a little bit, baby, and keep it consistent. We're entering a very, very fun time. Be careful with all these options, even the weeklies. Let's have some fun. Let's make some call-outs, and let's get it, baby. The Colt loves you. Let's go!